Hi, I'm Pavel Cherkashin. I run a venture fund called GVA Capital out of San Francisco. It's about 120 million doing early stage tech investments, mostly in AI, self-driving car, this kind of stuff. Now doing more into crypto. We've been the first equity investor in storage, for example. They did a very successful ICO in May.
I'm Daniel Schwarzkopf. I have started a cryptocurrency index fund, Crypto20, and have previously gone through several VC raises for other companies that I own. For example, Data Profit, which is a AI machine learning company.
Hi, I'm Alexey Girin from Starter Ventures. Starter Ventures is early stage VC fund, accelerator, and co-working space here in New York. So we have complete infrastructure for soft landing companies that are going to extend from Europe to US. I mean, startups, we have more than 50 companies in portfolio. Earlier this summer, we ran over our ICO for the accelerator in partnership with our partners from Singapore. Also, we have 4 companies that did their ICOs and 2 companies in process. So we have good expertise on this field.
Well, my name is Katya. I'm the co-founder of Startup Ventures as well. So I'm partner with Alexey. He did tell you everything already. And I'm happy to moderate this panel today together with Valentin, and thank you for having us. So I think Alexey prepped a small presentation with some statistics and some information and like a general overlook about the market and what's going on like in terms of ICOs and wow. So you it tells it all. I think Alexey will start. He has like 5 slides, and then we'll discuss further. I have more questions for each panelist.
Okay, so I prepared it this night, so maybe sometimes I'll use my notes. So in my opinion, classic ICO is dead. So everybody knows about ICO boom this year. So early stage companies raised more than 3 billion from ICO. It's more than funds raised from classic VCs on the same field. But in my opinion, so ICO market is overheated, and as we can see on this Gartner curve, so the amount of raising money is on its way down. So right now, it's not clear here, but if you look at statistics, so you will see that the amount raised in October is several times less than in September. So why it happens? So for these days, ICO became too expensive. You need $500,000 and more to raise money. And for these days, it's not enough to have just white paper and enthusiasm to make an ICO. You need to have a product, MVP, team, huge market, and so the process of raising ICO is like a traditional. You need to have meetings with investors, so it's not enough to make digital marketing campaign and to raise money. And from the crowd side, I mean crowd investors, so it's too much noise now. Compare more than 300 ICOs running right now, this day, and 10 or 20 ICOs at the moment at summertime. So how to make right choice? And of course, second reason why it's hard to investors, crowd investors, to go in ICOs. So previously, most of ICOs, it was heavy infrastructure projects, so like Ethereum or some platforms, and these days it's mostly product companies, ICOs, and of course you can't expect the same returns like from Ethereum, 200x return from the product companies. So just a moment. But returning to this Gartner curve, so I think we can compare it with Gartner curve we saw for the crowd investing boom, I mean crowdsourcing several years ago. So ICO curve is the same, but what's the difference? That the technology. So blockchain brings us several things. It's tokenization, So what's the difference? Why ICO will not die? And because blockchain brings us tokenization. Tokenization means liquidity. Second, it's small checks. So now market is open to investors with small checks. Previously, it was not accessible for them because of high cost of entrance. So what I think is that next type of ICO will be hybrid model when we'll have lead investors, I mean professional investors, which will leverage from crowd investors. So I mean that this. So I mean that professional investors such as VC will sell their competencies to crowd. I mean the pipeline, the experience in due deal. So, and I think the next step is something like hybrid platforms where professional investors will leverage from crowd. So these platforms will include compliance, custodian, exchange, so full infrastructure to make deals clear and more safe and with less risks. So I think that VCs will leverage from the crowd, putting some amount of fund, and the rest amount will be raised by crowd, by token sale to the crowd. So, and I think crowd will pay for investors' expertise. So, and VCs will benefit from this at the moment of the deal, so like finder's fee, and will have success fee at the exit event. So this is my opinion how the market where the market is moving, and we already have I'll say several associates, so couple people who working on this platform, and if you have ideas about this, you can find me, Alexander, and Talgat here in audience to discuss how we can change this world.
All right. Thank you for this small presentation. So you're trying to say that VCs won't die, and it's like going to be a new model, like a hybrid model. Is that what you're trying to say?
Yeah, I'm trying to say that, of course, VC will not die because they have strong expertise on this field, but they will transform to some hybrid model.
Is this like syndicates on Angel List?
Yeah, I think kind of.
All right. Daniel, what do you think? Because you were in the past five-time VC, now you transformed into
Yeah, there's
crypto world. So,
positives and negatives of both, really.
but like, do you see that the crypto crowd sale will replace traditional VC or not?
It won't replace it, especially not right now. ICOs have, pretty negative public perception, especially in the media. You could raise $1 million through VC and get, $1 million worth of free press in Forbes and TechCrunch, but you could raise $100 million on an ICO and nobody will mention you. So I think there are a lot of positives and negatives to either side. I don't think VCs are going to go anywhere soon, especially, you could think of it kind of as a democratization of, capital raising, and that you could perhaps make it equitable for people all around the world to get into, actually raising capital. And I think that's why we've seen a lot of the startups come out of, traditionally neglected geographies in terms of VC, like Eastern Europe, because it is so difficult to raise, traditional VC rounds in a lot of places like Africa, for example. I'm a South African citizen, and there isn't really a huge VC scene. So having an ICO is a natural kind of way to get into fundraising if there isn't a very viable VC scene. A lot of exits, funding new businesses and so on. So I don't think it's at that point yet, because you do actually need a few $100,000 to start up an ICO, and if you don't have that, you should probably not start. So you will need an angel investor at the beginning, or self-funded if you can. Well,
so at the beginning, we're going to discuss a little bit from the startup perspective, right? To go a VC route or ICO route. I think a little bit closer to then, we should discuss from the investor perspective, like from the venture fund itself. So I'll get closer to that. So what pros and cons do you see for a startup to, should he consider ICO or VC, other than those that you mentioned?
Well, for the startup, there's obviously the vast majority of ICOs are not giving away equity in their company. So you can do a complete raise with an ICO and your business, and you don't have to give away any equity, which is probably the key value driver for entrepreneurs considering ICOs. As well as, you're building a user base as well. And having a strong community of a few thousand people that you build during the ICO, these are people that have their interests aligned with you, and if you've got some sort of platform or a product utility type situation, these people will be very vocal evangelists for your business.
So, it looks like it makes sense for a VC if they want to invest in a startup, at the same time create tokens for this startup, buy some equity and tokens, and use this token distribution as building a consortium of co-investors, and also to attract early adopters of the startup. So it's kind of, am I understand you correctly that all is moving in this direction?
Yes, I think VCs will have to fund the seed stages and get some equity in a company, or perhaps a share of the token raise. But yeah, I think VCs will take part in ICOs in that way moving forward. I think there's also a strong trend of businesses that are looking to ICO having to actually develop a product instead of just going to market with a white paper. And I think the VCs will have to fund that initial development, or alternatively, you could self-fund it.
By the way, there are many VC in this room and investors. If you have different opinion, just pop up and say. Yeah. So just let us know if you have an opinion to say. Yeah? Okay. Okay.
I'm Rob Frasca. I'm with Cosmo Ventures. We're out of Boston and Dublin, and we're early stage investor. We're a little bit different than a fund in that we're a holding company, so a lot of our investments are off our balance sheet. So it gives us a lot of flexibility in the kinds of financing that we can do. And I agree with the gentleman that did I don't remember your name, that did the presentation, Alexei. I think the hybrid model is the way everything is moving, because what's happening is I think there's a flight to quality. There's a lot of junk out there, and everybody's trying to launch an ICO. I got this idea, I got that idea, and it's like pets.com all over again. Now it's pets on blockchain. And so I think that it's becoming more expensive to run an ICO. And I think you need some startup capital, and you need some expertise, and you need the network to really go out there, because you are raising money with, you're making road shows, you're looking for investors. So I like the hybrid model a lot as a venture investor. Buy some of the company, get in, and then help that company do an ICO and get some non-dilutive capital into the company. So I definitely see that, moving there.
I have a question for Pavel, if you don't mind. So Pavel, you're still doing traditional VC, and what is the pain you're going right now? I'll share mine, so I see if you're having the same.
I'll tell a quick story. So I talked to a friend of mine at one of these blockchain events recently. He has a outsourcing software company with 100 developers. And so not to raise salary to his system administrator, a couple of years ago, he let him use the spare capacity of the data center to do his own mining. Now you can imagine what happened. Now this guy is worth more than 20 million, and he's coming back and saying, I'm going to be your investor. So to me, this is a good indication of what's happening in the market. I think the status quo now is more of a singularity. It's not going to be there. It's not going to be there for a long time. It's going to get into a new state or new status quo very soon. So there's a lot of stupid money on the market now.
And stupid investors. Yeah.
Well, stupid in terms of in VC jargon. So meaning that most of the investors have no idea what they're investing, why, and very soon this will come to a different state where there will still be professional investors and professional fund managers, so I would say for me the main challenge is to survive through this. To make sure we don't fall into the hype on one end, and the other end that we are prepared for this new state that should come. And I think the most exciting part for me personally is that, for me as an investor, value of any company consists of two parts. You have the asset value, like the building, computers, and trademarks, and you have the profits from future profits from the business, and you could never separate those two. They were always mixed together, and that always created conflict, for example, between VC and private equity investors. So private equity investors are more focused on the profits, VC are more focused on increasing the asset value of the business. Now is the first time when we can split those two, right? And with tokens you can monetize future profits while VC can still enjoy investment into the asset value of the business. And some sort of a hybrid model is the best way to combine those two things together.
I'm there looking for different opinions from VC. I see there's one.
Hello, everyone. Brad Yassar. I am the co-founder of Blockchain Investors Consortium, also been an angel for a while, and have a crypto VC. I'm going to disagree with, I like the hybrid model, but what was proposed that VCs should have a 20% fee on everyone's investments, because that goes pretty much against everything decentralization and blockchain and disintermediation stands for. So instead of trying to apply old models of syndication and overrides over other people's money, I think we can find a much better, stronger model where still VCs provide the seed stage or maybe some of the early monies in some structure where they get their value out of the equation. But by the time tokens come in, saying, I need to get an override over everything seems a little taxing, and I don't think a lot of the crypto investors on the long tail of the investment cycle are going to be interested in that.
Well, it's not a the GP who is getting the 20% doesn't have to be one person, for example. It can be a crowd, can be crowdsourced as well, right? It doesn't contradict with the model. It's just saying that the general partner who is doing all the job in finding the deal, structuring the deal, should get some sort of compensation, and the compensation should be success-based.
The compensation doesn't also have to be actual cash value. It could be equity in the company, which is what traditionally VCs want. So it definitely doesn't have to be a cut of the raise. It can just be traditional equity investment.
Alexei, what was your thinking behind?
So I think that traditional GP LP structure must change, because really GPs can benefit only on the end of fund life cycle when you return all money to LPs, and so on this reason GPs trying to raise huge funds to have enough success fee, management fee, and hybrid model can bring them some profit by leading deals from the crowd, and so you will not need to raise huge fund, so your deals will be more efficient. So I think everything will change with this ICO fundraising, so it will change even GP LP model.
The reason why this model is also coming in place and in the future, because now with all this ICOs, it's harder for VCs to get a good investment and invest in the project at the seed stage, because a startup would often say, I don't need your money, like why would I take your 200 or 300? I can go and do ICO and raise like 2-3 million, right? So how are you competing at this moment? How are you convincing the startups take your money versus like doing the ICO?
This will calm down very soon. Look, imagine there is no problem with securities versus utility tokens. Imagine you can openly and legally tokenize the shares of the company now, right? Then nobody's gonna play with these utility tokens anymore for the product businesses, right? For the platforms, yes, but for the product business, when you come to investors, they will say, I want share in your business. Point. I want the share of the profit, I want the share of the assets. Why?
Voting rights.
And voting rights, correct, yes. So the only, this situation where you can raise money without giving away anything, I think it's not sustainable. It's not going to be there any longer. So still, we will return back to a normal VC model, except for now you can have more liquidity and you can introduce millions of smaller investors into this market.
Yeah, you wouldn't have ever been able to take small ticket investors from a multitude of countries before without cryptocurrency, just because payment processing fees and obviously all the legal issues around taking that, and I think it would be a much better model moving forward if we generally stick to cryptocurrencies.
You're a VC in the past, and you transitioned and you're raising your own index fund. Is that correct? So you're doing your ICO. How did you do that? Like, why would you change, and what made you change and transition?
I don't think that people would have taken such a risk in terms of a venture capital fund. A lot of them have set mandates and they can't touch a lot of things, and cryptocurrencies are generally one of them right now. Especially the established funds, they've got to agree on with their funders exactly what they get into, and cryptocurrencies are just not on the mandate. So I don't think it would definitely not have been as easy. And in terms of giving away equity, obviously didn't have to give away equity in that situation.
So that was the reason why you decided to do your ICO?
Primarily, yes. And in terms of a large raise, you do need some sort of capital up front.
So what was your budget to run the ICO? How much you spent?
Well, we're still busy with it, but it does cost a few $100,000 to get everything set up legally and to market it.
So do you think it's worth it? How much you raised so far?
We're on $7.3 million. It's definitely still got a month to go. Yeah, it's definitely worth it.
So do you guys remember the amount of ICOs back in January this year and comparing to now? I can tell you the numbers. So back in January and February, there was like 2 ICOs a week, okay? How many do you think it's now, a day? How many? 10? 30. More numbers? 100, you're
More
getting?
than 300
So actually
right now.
in October, there are like over 200 ICOs a day.
What's the average raise?
You see, most of them are started to fail, honestly, obviously. Everybody knows those reasons. But so back in January, the cost of ICO was probably like, I don't know, what's your assumption?
No, not more than 100.
Not more than 100, right. And now it's, and you said like you invested a couple hundred for your ICO. So I feel like we discussed the pain of venture investors, right, and where it's heading. Should we discuss some of the pain of the startups itself? So let's
I think
say
we can ask questions and
open for Q&A.
Yeah,
Sure.
they can ask question and also state the problems.
Q&A.
So-
I think there was a gentleman in the back who had a question. Where does the token reside in the capital structure?
In case of insolvency.
Pavel.
I didn't really get the question. I'm sorry.
So the question is, in case of insolvency, if tokens give a share and some assets and equity, right? It's not the case. No equity. No equity. It's utility.
Pure risk.
Yes. Yeah, but there is a downside protection that if some people consider this as a currency and they still use it, so even if business dies, it is the token is still existing and live its own life on blockchain, and it still could have a value.
Well, you can still argue that if this is considered an investment contract, so you as a token holder, you could potentially sue the company and prove that this is an investment contract, meaning that you should be it should be considered like a loan in the same category. But it will be a long and painful process, and probably there's nothing anyway by the time you can win the case. And there was no single precedent yet. But we discussed this with lawyers, and they say that the chances are high you can do that.
This can ruin the industry.
Hold on, Pavel. Out of your portfolio, current portfolio, anybody running ICO or no?
Yeah, well,
How many companies?
one.
One. And so what's the structure going to be like? Are they giving you tokens back? Are you exiting at a certain point?
No, we're long-term investors, so we take an obligation to freeze. So we're not selling neither at ICO nor later. We're gonna stay.
With their ICO, where would the token live?
Well, what?
So how are you structuring it? Like you have amount of equities in the company.
I can't hear you either.
Yeah, so, all right, so.
Yeah.
Hello. Yeah, so how do you structure it right now? They're just running ICO and you're getting nothing out of it.
What do you mean getting nothing out of it? We invest in hybrid model. So we invest in equity plus tokens with a commitment that we are not selling tokens at ICO, not to ruin the valuation. And this is the model that I feel most comfortable because we can have the long-term participation in the equity and at the same time have potential liquidity in the near future, right? And I think the only reason why we do it shares versus tokens and not just tokens is because currently you cannot put asset value of the shares into the token. So I'm waiting for the token that can actually carry the asset value of the business and the voting rights and everything. And then this will be the best tool for the investment.
Just gonna get some water.
I have more questions.
Hello, good morning. My name is Maria, and I would like to ask you a question about what is it that I need to look or the checklist that I have to go through in order for me to prevent people to invest in a company or an ICO that is not fraudulent? How can I protect my investment? What is it that gives me or makes me certain that your ICO is not a fraudulent launching?
So it is still wild west. So I ask the same questions to any startups, and I think until there is an option for a startup that failed to raise venture money to go and do an ICO, and this is happening in many cases now, the market is going to be in trouble. So the level of quality for the project should be the same for venture business and for the ICO business, and all the compliance and verification and due diligence should be the same. And Nico announced yesterday that there will be some sort of a standard for the market, which is good. Maybe we can rely on that. Maybe some platforms will provide this kind of technology solution so that investors can see the transparency. But still, you need to understand, in venture business, if I make one successful exit out of 10 investments, I'm already happy. If I make 2 out of 10, this is the home run. I'm the celebrity of the market. So at least 8 out of 10 projects I invest in will fail miserably and I will lose money on them, and I'm prepared for this. The question is, are the investors putting money into ICOs prepared to the same level of risk or even higher level of risk? They need to understand that at least 8 projects out of 10 will fail, and this is part of the business model of this market.
From a VC perspective, when looking at a potential opportunity, do you care if the blockchain technology is going to be on Ethereum versus commercialized? Are you indifferent, or what's your opinion on that?
I'm sorry, if blockchain technology, what?
Well, there's some that are going out and they're going to bolt onto the Ethereum network, if I understand this correctly. And then there's also companies like IBM or SAP that are open sourced blockchains, and some companies are going that way because there's a whole slew of benefits they get from going that route, but I know it's no longer decentralized and kind of defeats the purpose. From when you guys are looking at all the companies in here that are thinking of launching tokens, are you indifferent to the technology they're using, or would you prefer one versus the other?
I'm not sure I understood the question, but I would say that I care about blockchain more than the ICO as fundraising. So I care about core technology. So if there is a core technology behind the project, especially if it can bring the market to the next level, like decentralize something, decentralized Uber, decentralized Facebook, decentralized advertising exchange, decentralized photo storage, whatever. That would get my attention more than anything else, just because this is a huge leverage. You put a little bit of brain and you get a huge return.
Good morning, my name is Nina Knox. Just curious, what is your approach to intellectual property assessment before you invest, especially when you talk about blockchain? And we do know there is clearly, very active application process in that space. Do you consider it? Because when you mentioned the assessment of the company previously, you talked about tangible assets, but I'm curious to find out your point of view on intangible assets, especially when in this country it's, first to file, and we can talk about international considerations at a later time, perhaps. Thank you.
So, in my opinion, it's second question, because first question is the possibility of the team to bring the result, to make project, and all intellectual property. It's so. Of course, you can make patents and so on, and then trying to make product and build big company. But I think, first of all, you must execute, make product, make revenue, and intellectual property is the second question.
What is interesting that we see only 2 venture funds which do both traditional venture investments and also ICOs at the same time. Am I understand correctly that among all of the VCs here, we just have only 2 VCs which doing both ICOs and traditional investments? Or there are other VCs which do both? That is an interesting phenomenon. But why there are still a few VCs which do both? Okay, I'm passing to another question.
Hello, Gelfred Data Art. I have a question. Like, for your companies, how do you come up with the valuation of tokens, and what prevents your companies from issuing additional tokens once they decide that they need more capital?
Well, same as with shares. With shares it's even worse. You can never control how many shares the company is issuing and what's happening to the value of the shares. So, to me, the only way to evaluate it is to get the market price. So, if somebody else is willing to pay this price, most likely this would be a fair market value. So that's why venture funds, including ourselves, always co-invest, to get an independent verification of the price. So the same is happening with tokens. With tokens, it's even better because you can go to an open market, except for you get all these crazy investors who might get excited about different things. But overall, I think there's no Excel spreadsheet that can define you the fair market value for a token. I don't know what you think.
Same opinion. So,
but also with VC, you have also some due diligence going on, right? And there's a certain round that the company is closing at a certain valuation. You can negotiate and join or not. With the token, it's also in a way a public offering, right? So they're doing some discount in advance, and then they do ICO, and then the token goes into exchanges where the price goes up and down. So it's a little bit different technique, I would say. Well,
the best kept secret of venture industry is that the valuation of the company you're investing at early stage is not based on the current asset value of the business, but it is based on your expectation on at what price you can sell the company at the next phase. Meaning that when you look at the company, you think, okay, is this a $50 million company to sell as a technology to Google? Is this a $1 billion company that you can take public? And then you discount it to the current level of risk, and you think, okay, if I believe we can sell this company for $50 million in 3 years, then current valuation shouldn't be more than 5 million, taking all the risks. That's how you come up with the current valuation. And it's with the ICO, there's just not enough practice or
Right. Also with
data.
like the regular VC, right? The company would have, let's say at the 5 million valuation, they would have a product already, they would have some traction, certain numbers you can play with. Depends on the company. With ICOs, these days, there are so many ICOs, there is nothing behind. There is even no product, there is no MVP, nothing. There's just a white paper. There is like a team, some team.
What a surprise for venture industry, right?
Yeah.
But I think that this is similar because every time venture capitalist he's buying expectation and the company sells this expectation. The same is on the ICO market, and the price depends on the volume of this expectation, as Pavel said. So, but every time it's a story about sell and buy future, sell and buy expectations.
Thanks a lot, guys.